What's good, guys, and welcome back to another daily market analysis here at Elementary FX. It is Tuesday the 11th of April, and before we look at potential trading opportunities, I would like to review yesterday's chart on the USD franc. So this was our chart from Monday's analysis, and as you can see, price came down into our decision zone, this zone highlighted in red right here, before making a pullback towards the upside. I didn't manage to get a position in as I had a more conservative entry right here, and I missed out by about 8 pips, but you know what, that's fine because it's all part of the process and there will always be another opportunity. Which brings me to the next chart, and this is a Canada yen on the daily, and today we'll be looking for a potential bearish entry. But before we do that, I just want to talk you through the basic thought process we go through every time we look at a chart. I'll make it brief, but if you want a more in-depth approach towards this, you can sign up for our elementary course on our website, because that's where we teach the basics of reading a price chart all the way up to trade management. So the simple thought process I'll be going through with you today will help you determine how you want to approach a potential trading opportunity, and this thought process is called the EPD process. Right, the EPD process. E stands for establish. Let me just write that down for you. E stands for establish. And essentially what that means is that you want to establish the trend, because we will always be looking for trades in the direction of the trend. And how do we do that? How do we establish the trend? Simple. We look at this move right here, and we can see that price starts off here. We make a lower low, we make a lower high, a lower low, a lower high, a lower low, lower high, and the process continues on and on and on. And that's how we determine what the trend is doing, whether it's an uptrend or whether it's in a downtrend. And in this case, we have a downtrend because of lower highs and lower lows. And in the case of an uptrend, you would have higher highs and higher lows. So the next step we want to do is P, which stands for predict. Predict. What it means is that we want, after we have established the trend, we want to predict where price is going to go. And naturally, the trend is your friend. So we will predict that price will make its way downwards. We want to predict that price will continue in the direction of the trend, and in this case it is going downwards. And that's where the next step comes in, D, which stands for decide. This is where we have our next thought process, the SFR, also known as structure, Fibonacci, and RSI. But I won't be going through that with you today. So just for today, we'll just go through EPD. So we've already done establish, we've already done predict. Now decide. When you decide, you want to decide how you want to enter the trade, and in this case we are looking for a potential bearish opportunity. So we are looking on how we can decide on how to enter the trade on a bearish opportunity. And this is where you zoom in on your chart, and in this case we look at the 4-hourly chart on the Canada yen. So this is the 4-hourly chart on the Canada yen, and like I said previously, we are looking for a potential trade towards the downside. And right here I've identified a nice point of structure, a nice resistance zone right here, because price has come up into this zone, rejected it. And if you were to look left, you can see that this area has reacted as resistance here, resistance again. And if you were to look left, you can see that price has a lot of consolidation right here. We have a lot of support and resistance right here. Looking left, we can see more support, a gap right here, a gap in our structure. We have more support right here and resistance. So this could potentially be a very good trading opportunity. However, in this case, not only do we have this, we have two potential patterns setting up. The first pattern we want to look at will be a bearish cipher pattern. If I would draw it out for you, we have our X to A leg right here, our A to B, B to C, and a CD completion coming right at that 786. Let me just draw it out for you, 786. Right here. So if price were to come up into this area, that means we would get short. Not only do we have this bearish cipher pattern, we also have a bearish bad pattern. And if you were to zoom in on the chart, we could draw out another pattern. We have our X to A to B, B to C, and our CD completion coming at that 886 level. Let me just make it a different color for you. Let's make it blue. So now we have two patterns setting up, confluencing with our structure level and also confluencing with our bearish momentum. I don't want to go through the cipher pattern, but I do want to go through the bat pattern with you to show you how it works. So we have our X to A leg and our A to B leg right here, B to C and C D completion. Typically, an A to B leg is a 50% retracement of the X to A leg. Unlike the Gadli, which is a 618, this is a 50% retracement. So we have our X to A leg. Our A to B comes up at slightly past the 50%. As you can see, it's slightly past 50, 53.2%. So this is a valid pattern. We have our B to C leg and our CD completion coming right at 886. A conventional bat pattern completes at 886. However, there are more. You can use more confluences of Fibonacci's. For example, let me just make this a lighter color. For example, you can use an extension of the A to B leg and look for any Fibonacci extensions that confluence with this. So we have a swing low to swing high, back down to swing low. And what levels do we see? We have a 1618 possibly. There you go, a 1618 confluences very nicely with our pattern completion. Also, if you look at this previous cipher pattern right here, which I drew for you just now, I'll just draw it quickly for you. Right, we have a cipher pattern here. If we were to use a cipher pattern completion, which is the 786 retracement level, let me just draw it for you. Our 786 completion of our cipher pattern completes right above the completion of the bat pattern which I explained. So this would give us a potential zone for entry right here, which means that if price were to come up into this zone, I would be looking to get short because we have two patterns setting up and we also have very nice structure, which is always the most important. If you want to get more fancy with this, you can possibly use an ABCD pattern. An ABCD pattern means we have an AB move, and if you just copy and paste it, it's the same move, the same value. It's the same move of the AB move. Okay, so we can use this leg right here, A to B, and if I were to copy and paste that, let's see where it ends up. The ABCD pattern completes right above that zone, slightly above that zone of our two patterns, our bearish cipher and our bearish bat. So this would be a very good trading opportunity. If price were to come up into this area, I'll be looking to get short around here. Possibly stops will go above the X leg, and you know, I could go for conventional targets, or I could just go for a trend continuation trade, which would be about 200 pips. I'm not too ambitious, so I'll probably look for the most recent point of structure. So this has been the Canada Yen on the 4-hourly chart. This will be the chart that I'm looking at today, considering that most of the other trading opportunities which I went through yesterday, the Euro USD and the USD franc, didn't play out so well, as in they didn't trigger our trade. So Canada Yen is what I'll be looking at for now. So this has been the daily market analysis here at Elementary FX. If you're not a member yet, do sign up with us. Our junior memberships are free with the discount code LAUNCH100. And also, when you are a member, you get to join our private trading group where we discuss potential trading opportunities like this. And you'll have access to many more free videos on our website. So thank you for joining me, and I'll see you in the next video, guys.